Hey, welcome. I hope you're doing well. Today I'll be taking a look at Nike stock and elaborating on the point people are saying that this is the kitchen sink quarter. Um, do I agree with that or do I disagree with that? You'll find out by the end. But as you can tell, it has been pretty rough for Nike stock in honestly the recent year. Um, this is primarily, if you take a look, their margins have declined over the years. Well, specifically from, you know, since, well, over the past year, margins have been declining overall. And also the EPS has been affected by that as well. So this quarter reminds me of 2026. If you take a look at 2026, apologies, I meant 2016. This reminds me of 2016, where in 2016, if anyone remembers, or 2016, 2015, Nike was getting disrupted by Adidas and some other brands, and that was their kind of kitchen sink quarter as well. Well, not quarter, but 2 consecutive years. From that point, they have actually grown margins, as you can tell, steadily have grown margins. Their EPS steadily increased, and generally they returned back to growth. Well, kind of returned to growth. They had steady growth, and they started beginning to rebuild their brand. They had strong momentum until, obviously COVID happened, which disrupted their entire business overall because of, manufacturing problems. And here we are around the same problem where revenue growth is a problem again. But is this the kitchen sink quarter? Is this the kitchen sink year? Well, to elaborate, you would have to look at their investor call, in which they have stated this is not exactly going to be the kitchen sink quarter. It may be. They're going to provide higher wholesale discounts to liquidate aged inventory, and which they expect will continue through the first half of fiscal 2026, which is going to end around January 2026. Which all of these actions over here, which is higher discounts rates, reducing inventory, and just generally moving inventory out, is going to take about a year in general. And once they do, I believe they will get back to their momentum, and I do believe margins will expand. This will take time, and this is the reason people are saying it's a kitchen sink quarter, is because marketing has, went up, cost of goods sold went up because of all of this stuff over here. And at the same time, revenue declined, as you can see over here. So what should you do? Is this company worth buying? Well, let's take a look. It has a pretty good dividend yield. Is the dividend safe, though? It's around 50%, I believe. Yeah, 50% payout ratio. And this is the best point you are able to get in terms of dividend, purely dividend play. Nike, since 2019, I don't have data previous to that, but my guess was their dividend yield was lower than that. And their payout ratio is also lower. But regardless, what's the bankruptcy risk in this company? Well, I believe they are generally around the same. Yeah, as you can tell, they're around the same. They have pretty good free cash flow. Well, this is looking in the past, and I believe the free cash flow is lower. Well, actually, this year it would be around higher because they are liquidating inventory. So I would actually look at the free cash flow to be a little higher than usual, maybe around 2023 levels, since they are in their full year. Well, they are in 2025. I don't know why there's no 2024. Strange. But regardless, as you can tell, their debt is well managed, and their cash position, or at least cash equivalents, are around a good level to where they can pay off most of their debt, and their free cash flow can basically manage the rest. And then they would be, in positive equity. But this points me to my next question. What about the valuation? The valuation, I do believe, is pretty good, although it does not look that good on the metrics. Although, yeah, it is better than the 62 PE than that it was in 2019. But the growth is nowhere close to 2019 levels, which were, let me take a look. The revenue growth was 7%, and we are right now negative 5%, which is not that good, obviously. But can they grow? I do believe by next year they can get revenue growth. They are going back, and the CEO has mentioned this on the call. I do not want to go find the quote, but it was around them refocusing on athletics and just reducing scope in general, which I believe will increase their margins. If we take a look at their margins, I do think there's a bit of a margin story here. Um, as you can tell, 2016 happened, 2015, margins were improved significantly. I do believe this is around what's going on since 2016. And if we take a look at the chart in 2016, you will find an interesting something that you can use to entail a bit of the future a little bit. As you can tell, this looks overly similar. This is the decline over here. This would be in since 2022, but let's take a look at around 2023 levels because this is ridiculous. Everyone would agree this is overvalued. But we take a look at this decline, and the story is around the same. Nike can't compete. They're too bloated. Their inventories are too high. The story in 2016, if you take a look, was around the same thing. And past that point, I'm not saying it's going to go on an exact same run since, it went from $50 to 160. 160 unless they return back to growth, which I do believe they can return back to 4 to 7% revenue growth consistently, especially since the CEO has mentioned that they are refocusing on China, which he has mentioned 7 times. Let me find the exact quote here. Well, sports is growing in China. This is also quite interesting. Sports is growing in China, and we must accelerate our pace. He mentioned China 7 times on the earnings call, but I do think there's something very interesting. If we take a look at the distribution of Asia, it's about 15% of total revenue. Is this revenue? I'm considering, yeah, revenue. I do believe this is true, that this may grow to around 14 to 15 billion. We have seen, I believe they mentioned that China's decline. Sorry, it's around here. Yeah, right here. In Greater China, here, this part right here, declined 15%, and then Nike Digital 20%, 6%. This is all Chinese numbers. I believe these numbers right here can actually rebound significantly. I'm not betting on their economy in general. I'm betting that Nike can return to its competitive position in the Chinese marketplace, which I really, really believe they can do that. And the CEO has mentioned they are refocusing, or at least reducing scope. They are reducing scope in the amount of sports they are focusing on, the amount of regions they are focusing on. So, and it's a bit of a margin story, a revenue growth story, and a reduction in scope. All of these will, I believe, by around 2026, we will see pretty significant progress in both margin, return to revenue growth, and maybe free cash flow. But I would be more interested in seeing cost of goods sold come down. This will happen naturally because they're going to reduce the amount of marketing days, which I believe the CEO has spoken about this. Yeah, right here. In December, finishing strong holiday results. However, in January and February, we significantly reduced days of promotion in North America and EMA. This is a big story with Nike. Nike is focusing a lot on reducing the amount of days they are marketing, the amount of inventory they're holding, and the amount of promotions they're going to have. This all should reduce the cost of goods sold. This should increase margins, maybe return back to revenue growth, but I would actually expect revenue growth to come from, China, not North America. I would also expect it to come from wholesale and not, direct to consumer. All of these factors should improve their earnings per share. And as you can tell, they've been doing a lot of write-downs as their tax rate is 5.9% compared to 16.5 last year, which is all interesting because it does actually seem like a kitchen sink quarter. What are the expected returns I personally would project? Personally, I would look at this as around 10 to 14% annualized return for the next 5 years. I know that doesn't sound that great, but if the margin story and the revenue growth story comes back in 2016, you could see a front-loaded returns in that year. And the 10 to 14% annualized return is not including dividends, which I do believe the dividend story is here. They are going to grow their dividend over the years, and as you can tell, it has naturally grown consistently. And since the payout ratio is pretty reasonable, did I pass it? Yeah, it's around 51%, like I said. I do think with return to revenue growth and in margin expansion, you could see from, the present, if you bought these shares at the current price, which are $68, you could see 3% dividend yield in the future for your shares, not like in general at the price in the future. But as in terms of what you're buying the stock right now, the dividend yield could be in the future 3% for sure. Although the CEO has mentioned one more thing that I wanted to tell you about is they actually priced in tariffs into their projections, which I don't believe is this one. Yeah, they are including the impact of tariffs. So if this does not happen, I do believe they can beat projections by around 4 to 5%. Well, this is around restructuring, right? Yeah, it is. So if tariffs do not happen, there is a potential significant, in my opinion, pretty significant beat on earnings in the future if tariffs don't happen. If tariffs happen, that's not that good for Nike. That might be a headwind on COGS, cost of goods sold. But otherwise, I do think this is a pretty good company to buy as like a buy and a forget, Has a good dividend yield. It's safe. It has good balance sheet. Probably around 10. Well, I would actually expect their margins to expand more than they were in the past. The highest point they got was around 13%. I would actually expect 14% net income margins. Additionally, this was mentioned by an analyst. What's his name? David Schwartz. Which this is a really good story. The company issues $2 billion in yearly dividends, but this is also a buyback story where Nike in the past 2 years has bought back 8 billion shares, which is roughly 15%. So this is a very interesting thing. It's both a buyback story and a dividend yield story. And as I said, a revenue growth story and a margin expansion story. So this could be a good point to buy this company. Could it be lower? I wouldn't be surprised to see it lower. I do think this is a kitchen sink quarter, or at least we are in the range of this being a kitchen sink quarter, in my opinion. It's either in the next one, the previous one, which is this one technically, or the one after that. But that's basically it as far as Nike. I hope you enjoyed and found this helpful. If you did, please like, share, and subscribe. All right, have a good one.